Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Thursday, July 18, 2013, and we are going to do this one day early this week just because I am going to be gone tomorrow on Friday. Additionally, there really isn't much scheduled for tomorrow. The only real big thing is a G20 meeting tomorrow and Saturday in Moscow. So other than that, there really is not any type of market moving economic news or anything scheduled. So it should be a very, very quiet session tomorrow. Just a couple of items today that moved the markets was in the U.S. Weekly unemployment claims came in at 334,000. That was lower than the expected 344,000 and much better than last week's aberration of 358,000. So still very low. We're still seeing some very good numbers for weekly unemployment claims, and this should show up again in the monthly numbers when we see the monthly numbers the first week of August for July. So that's very good. Also, the Philly Fed came out with their manufacturing index today, 19.8, very big number. We haven't seen that kind of a number in a couple of years. Expectations were for 8.5. Now this number can swing quite a bit back and forth, but overall the report itself was very broad and very positive. So that's a very good sign. It's a very small part of the country, but nonetheless it still has some meaning. It's a very industrialized area, so it's pretty good. It's very positive for the U.S. and for the U.S. dollar. So let's take a look at the technicals. On the Euro-US dollar, down about 17 pips right now as we're coming into the close, and we can see we're having this kind of stair-stepping here. We've jumped up, we've fallen back, jumped up, and now we're falling back again. But we are at some pretty good resistance levels up in here. So maybe if we have one more jump up to about 132, and that could possibly end it there, and then we'll fall back off. Now, longer term, of course, we look at this and we just see how it is very much in more or less a trading range. We've spiked out of it a couple of times, but overall it's still very much in a trading range here, and it really looks like at some point we're probably going to fail out of this just because we have not had enough momentum to carry us higher. And if we look at the monthlies here, we can see that now we've been in the same range for just about 6 months, and we have failed to rally. We should have rallied up and taken out these highs, and we did not. So that's really a negative for the longer term, and we can see that kind of playing out here in the stochastics as well. So more than likely the dollar going to gain ground and the euro will lose ground. The pound against the dollar up about 6 pips, back above 152 here, and we are forming this kind of B shape with a little bit of a consolidation to its right side, which could mean that we'll go higher out of this. However, I was looking at this too the other day, and we just got this kind of broadening pattern here, which is really not a very good sign at all when something does that. That usually means that it's going to turn around. But the fact that we're really in still of a trading range here, as you can see, I mean, going all the way back to 2010, we were in the same area. So we just continue to trade around or chop around in this area. But we are below this trend line, and that's negative. Now, if we jump out here to the monthlies, we can see how this whole consolidation here was really in a triangle, and we broke out to the other side. But the fact that for the last 4 months now we failed to really sell off, that's not exactly a great sign. So we could sell off here, we'd get down to the 140s and then probably come back and end up staying in that range for quite a long time. It's very, very possible. So we really got to wait and see on this, but technically we're still negative, still looking for it to sell off. US dollar against the Swiss franc, up about 40 pips right now. Second day up in a row, having a pretty decent day. Still looking like there's probably going to be one more leg to the downside here. We could get down into the 92.50 area, maybe down into here, and maybe do that in a day or two type of move, or maybe one just quick day and back. So overall, it still looks a little bit negative here. There's nothing showing that we're turning around just yet. Same on the weeklies. We're still in this consolidation area. We were moving up very nicely there for several weeks and then fell off last week and this week. And then on the monthlies, we're just pushing that edge here. We're really bouncing up against this first trend line, and we're not that far away from the second. So we get up there around that 103 area that we've been looking for, close up there on a monthly basis. That would be extremely positive. US dollar against Japanese yen, up very nicely today, up about 100 pips, back above 100. And we were looking like maybe we were going to sell off again here, and now today's action, well, maybe we're going to turn around and we're going to move back up. And if we can break above this trend line and close above this area also on a daily basis, about 103, 103.50, that would signal now, all right, correction's over with, time to move on. Same here on the weekly. That would be the same thing. We close above that trend line that we've been below and above the old highs. That would be very strong indication that we're going to continue to move higher, and it's gotten its mojo back and it's going to move again. Now on the monthlies, it's never given up, and still on that very, very steep incline here, and really looking like it's going to continue. Nothing to give us an indication that that is not going to continue. Euro against the Swiss, nice day today, up about 35 right now, but we're still kind of pulling back here a little bit in a corrective phase. So maybe we pull back a little bit more, get down to around 123 or so, and then pop back up. But it really looks longer term like this is just a matter of time until we breach those old highs, close above them, and then start moving higher. So longer term, it still looks very, very strong, looks very, very good, and looks like it will probably continue. Euro yen also having a decent day today, up about 105, and we're pushing now the 132 level. So we're finally starting to get out of this range a little bit here. We're getting some decent momentum on the upside, and we're finally starting to get out of the range. On the weeklies, we can see it a little better here, where we're up a little bit, about almost as close as we were to our old highs here, about 133.50 area. So not too far off of that. That's a day's move really in this market. And on the monthlies, we still look very good here, really looking like we could pop up maybe 135, 136, maybe not this month, but quite possibly into August here, and get up around that 137, 138. That's our target for this cross, about 137, 138. So US dollar against the Canadian, down a little bit today, down about 25 pips, and we're consolidating here now. All week we've been consolidating, and we should have one more spike down, and then we should come right back. We got this very nice stair stepping going on here, where we're moving up, coming down, moving up, and coming down, and each downward pass here is a little bit less than the last time. So we're really starting to build up that momentum here to move up. And we look here on the weeklies, we can see we almost have kind of a curvature coming here with that momentum starting to really pick up. And we look on the monthlies, we can see it even more here, and it's really picking up very nicely. And what should happen is we should get now a few weeks, maybe into August, into September, and we'll see the dollar really start to jump up against the Canadian dollar quite a bit, and get up around probably 110, 111 area before we see any kind of meaningful pullback there. On the Australian, we did run up Tuesday of this week, ran up very nicely, breached that little trend line that we have, or channel line, and traded above it yesterday, and we're still really above it today. So we could have a little bit of a correction here, or a turnaround possible. But the action of the 3 days put together, that's actually a very bearish pattern. So we could see some more negativity here and a drop to new lows. Now technically we run out here to the weeklies, and we can see that we're still within a little bit of a channel that there is, and technically we should be down in this upper 80s area, and on the weeklies. And we look at the monthlies, well, we're almost straight down on the monthlies. So even though we're popping up here this part of the month, we still got 2 weeks left in July. We could very easily finish out the month of July down around 85, 86. So really not getting too excited about this little pop up here. longer term, we're still very negative and really looking like it's going to sell off. So any type of rallies like this, probably good selling opportunities, and that's what we've been using them for. Any questions or comments, please feel free to stop by FX Addicts. If you're not a member, we do offer 7-day free trials, and also I am available for questions and help at any time. So feel free to stop by or shoot me an email, tim@fxaddicts.com. Thank you very much.